Hey, it's your boy Yvonne Sasson here with Startup Ariya Show. Again, if you haven't done so already, please check out Startup Ariya Show, where you could find and see the video on what top 5 angel investors are saying about angel and real estate investing. Today, we have 2 special guests, and I'll cue them in now. Their names are Ashton and Christopher Le- Levarek with Valkyrie Investment Group, and I'll just have them introduce themselves right now.
Hey, thanks, Yvonne. Appreciate it. Great to be here. I'm Ashton, and
I'm Christopher Levarek. Yep.
Awesome. Can you guys talk about a little bit more about just a short clip of your background, just so people know who is Ashton, who is Christopher with Valkyrie Investment Group?
so we're both veterans. So we've been, in that full-time space, full-time W-2 job space for a long time.
Right.
I retired out of the military. Chris got out of the military early, went back to college. And then we decided to start this business back in 2018 because we saw the benefit. And Chris can kind of talk about that more, but we saw the benefit of creating multiple streams of income that are passive streams of income, right? That we can hedge against inflation, that we can hedge against the downside of the, up and down of the stock market. And so, I'm going to say something crazy here. We took everything out of our retirement funds and went straight into multifamily real estate.
Wow.
Yeah.
That's awesome. Anything else to add on that, Christopher?
Yeah, I mean that's the story. Much like he said, we tried to grow something bigger than just having one stream of income through your job, and that became kind of our calling to make this a reality for other people as well. We've done this for 4 years. I quit my job this week, actually, W-2. It is possible to do it. It is possible to have great tax benefits. So we're spreading the message that we did. So
awesome. And that's kind of what I wanted to ask about as we dive deeper into this, because most of the people that are listening and tuning in to this video podcast, either on YouTube or Apple Podcasts, Spotify, are trying to learn more or in depth of how can I, as a VC or startup angel investor, accredited or not, invest in more and learn more about what you guys do in the real estate investing world, right? In the startup realm, it's also there's not a form, but there's a structure called the syndicate model, and essentially it's the same thing that real estate syndicators are using as well. And I think we'll dive into that a little later.
Cool.
One of the questions I ask everyone that comes onto this, and this is probably the most important question out of all the questions, is at the deepest core, why do you do what you do now?
Well, because we've identified that we want to be in control of our lives, I think. And the fastest way to do that is to create time. Like, time passes for everyone, time stops for no one. It's the one thing you can't buy more of. But if I am working at a W-2 job, how do I get my time back, right? And so we both have kids. I think it's very important. You realize it's very important. If you want to travel, if you want to spend time with your kids, you want to be there for your family, you need that time.
Right.
And being able to have multiple streams of income, passive income or residual income, which, a lot of people are not familiar with in America. We think the harder we work, that's how you make money. And then you get to retire at age 59 and a half, right? We saw that early on. We had that wake up call. And I say early on, it actually took me 18 years to see it, but yeah, that's it, right? Like, what do you really want to do out of life? Do you want to work for the rest of your life, right? What did Warren Buffett say? Like, find a way to make money while you sleep, or you'll work till you die. That's it. I don't think it gets any more succinct than that.
And then what about you, Christopher?
Yeah, I totally agree. I mean, we have the same vision because we've been working at the same company for the last 4 years, but I definitely think that I'm more the detail guy. And so I'd say, what is the alternative to trying to create more time, to try to create more financial freedom? The alternative is far more risky. And that's accepting that you do not have the control and you give it up to someone else, whether it's an employer, it's your 401k provider, it's Social Security. Really don't give it up to them. And that is the more risky approach. And I am a very risk averse person. So I chose the less risky option, and that option was to get my time back, and that was through investing in passive income assets that can do that for me. So
Yeah, I mean, I hear it all the time, even for myself as an 11-year-old learning from Rich Dad Poor Dad as I skimmed the book. This literal book right here.
okay.
It looks old now and racked up, but I skimmed it at 11 years old. He talks about the quadrants, and the point being that you're trying to buy your time back. Is there, or was there a specific time, or like what can you describe the story behind the turning point behind you prioritizing time with your children and family over what you were doing before with your veteran job and stuff like that?
Yeah, I
What was
mean,
that turning point?
Chris had the aha moment more than I did.
It's funny. I had my first son in 2018, and I started the business same time. So we bought our first property August 2018, and my son was born August 15th, 2018. And so it's almost like the universe just telling you, like, there is something more important than your video games, your bar going out, you're working at your career job. And the aha for me was, if you'll remember, there was a huge pullback in 2018. And it was probably a kick in the butt. It was about 20% drop in the market. My 401k took a drop by like $7,000 in a week. And I had been putting a lot of money into that thing. So to see that happen where I did not have control, I did not see it coming. And it was in an asset that I didn't even know if it was going to support me when I'm retiring. Yeah. It really woke me up to the fact that I wasn't in control. And now I have this kid of mine who I want to spend time with. Sure, everybody has that story, but I also want to, show him a better way to do things and not just encourage him to get on the hamster wheel. And because I loved the hamster wheel, to be honest, I did. I liked comfort. I liked that comforting feeling. Uh-huh. But 2018, it was the wake up. It was, hey man, you're not in control. And by the way, you might not even have this 401k money when you retire. So
dang. That's a great story, by the way. Thank you for that. And at Valkyrie Investment Group, is there now a higher purpose for serving a specific group of people now that you guys have a background in the veteran world? I personally don't have that background, but is there like a higher purpose now to give back to that specific community, give back to a specific charity, Yeah,
absolutely. A large part of what we do is educating investors, because a lot of people don't know that you can do this. They don't know you can buy an apartment complex. They don't know you can create passive streams of income, mailbox money. People just don't know that. They think they have to go out there and hustle and grind for this stuff. But there are other ways to create multiple streams of income with ease. So a lot of what we do is education. But on the flip side, yes, every deal we do, we're putting aside capital that goes towards a veterans nonprofit. And we're looking at, I think we raised like $2,500 last year for Big Sky Bravery, which is a veterans nonprofit that supports special operations veterans. And we're also looking at supporting Unbound Now, which fights human trafficking. So and the cool part about that is when you underwrite a deal, when we look at a deal that we're going to buy, right, we can build that into the return, into the underwriting. And you can say, well, this wouldn't support that. Well, then if it doesn't support that and support our investors and support our investment goals, we're not going to do the deal. So correct, you get to choose. So now when people invest in a deal when we invest in a deal we're creating returns for some nonprofit at the same time.
Wow. That's a great way of looking at all of this. And in that regard, I want to ask, okay, is there specific core values that you guys have incorporated in the culture of what you guys do at Valkyrie Investment Group? And for those people that are looking to invest with you guys, possibly listening on this call, I'm sure that some of them are willing to align with people that have their core values too,
Yeah, I mean, the big thing we get behind is making real estate investing simple. It can seem very complicated, seem very complex. And so you just give money to your financial advisor from insert your 401k name there. And that actually is not the best way, but we understand people like simplicity. They
Correct.
have busy lives. They have, kids and passions and jobs. And so really we get behind making it simple for people to invest, and hopefully, people invest with us kind of get that experience. So that's kind of our main purpose for the company. But yeah, the vision and values, we align definitely with the veteran community, with the military community. We align definitely with the family man. We're big on relationships. So, that's one of our core values is relationships focused. And really that can be family, but it could also be partnership. We're big on the partnerships. Every deal we've done since 2018 had a partner. We never did a deal by ourselves. So, whether it was joint ventures, LLC partnerships, syndications at a larger scale, it's always about partnerships. And our big one, of course, is happier, healthier, wealthier. So we're all trying to improve our life in some regard. And we want to align with people that are not scared to do that. They want to grow. They want to be happier. And everyone kind of wants to be happier, but then some people really don't understand that everything they do is to be happy. So, we just don't want to align with someone that comes along and says, hey, what's the highest return you can give me? That's not our guy. We want to first, what do you like? Let's hear your story. What got you here? Let me tell you about my story. And do we have alignment? That's who we are. We don't focus on, I'll give you 40% return. Give me your cash. That's not our game. So
correct. And that's more transactional as a relationship. And I'm really, really, really seeing that there's huge value in the relationship portion, because you are sort of married to them for like whatever the business plan is for exiting 5 to 7 years or whatnot. That's typical of syndications, if not earlier.
Very much.
And if it's more transactional, then when stuff hits the fan, then it's definitely in question of like, okay, do I do the business side or now the relationship side, or do I preserve the relationship, right? And so, in talking about the relationships, though, as part of the due diligence for the people that are listening here or your potential investors later on, I see the pitch going or the pitch framework being as team, market, and then deal, right? So that's kind of why I've framed all of my questions to be, hey, who is Valkyrie Investment Group, right? And now going back to the market and how it all goes, that's how I'm leading this conversation. So in this case, with all of the stuff that's going on, it sounds like you guys have an incredible team. All the stuff that's going on in the economic world and the political world, how are you guys at Valkyrie Investment Group protecting the downside for these investors, especially with the big hottest topic being inflation?
Yeah, that's a great question. Well, let me kind of frame it a different way. So when you invest in real estate, you're not buying it dollar for dollar, right? So if you go out and invest in gold and you throw that gold in I just heard this story the other day and I'm going to use it again. You throw that gold in your safe. That gold is going to appreciate. It's going to be worth what it's worth. You can take it out, you can look at it, you can show it to your friends, right? But that's it. It's worth what it's worth. You're never going to improve or force the value of that gold to go up.
Correct.
It's going to be the value that it is based on the market, based on the value that the market values it at, right? Now, if I buy a piece of real estate, let's say I buy it for $100,000, and I buy $100,000 piece, or let's go $1 million. I buy $1 million property. I only have to put 20% down. I can use leverage, right? And then if I want to put a little bit more money into it, I can improve the property. I can increase the net operating income, which increases the value of the property. And we can do that very quickly. If we raise the rents by $25 per month on a $1 million property, on a 100-unit property, like you can raise the value by $1.5 million in under 12 months.
Correct.
And so you're asking how does inflation affect our decision? In fact, it drives our decision to invest in real estate. It tells us, don't invest in anything you can't control. Don't invest in anything that does not create cash flow, right? Because you invest in real estate, not only do you have the value that you put into it, but you also have the cash flow that's coming back.
Right.
You have the tax benefits every year because there's so much depreciation on the property, decreasing your taxable footprint, right?
Yeah.
Or obligation to the government. And then lastly, like your tenants are actually paying down your mortgage. So you're increasing wealth in 4 different ways. You're not going to see that with other investments. So how do we hedge against, how does inflation affect our decision? I mean, it's a huge driver of why we do this.
Right. I thank you for that. And I know you guys don't necessarily do deep value add. Maybe you guys do, but essentially you guys are in the value add space as cash flow investors. And in your due diligence, how are you guys making sure that within 5 years, 7 years, within the business plan, that it not only projects the way you want it to, but you're also making sure that you're covering not your margins, the risk for these investors. For if there's a fire, then we do this. If there's a downturn, we do this kind of thing. How are you guys making sure that not necessarily that doesn't happen, but in protection of that, not only their capital, but like the actual investment property?
Yeah. Every investment has risk. And so when we have the call, we do say that, right? Everything has a risk. What is your choice is up to you. So are you going to go invest in, Dogecoin on crypto? Well, that's going to have a risk of a different value than, say, real estate. Doesn't mean it's wrong. It means what are you available, or what can you take as risk tolerance? Correct. I would say, it's, in my opinion, it's riskier to invest in bonds than real estate. And people might think that's crazy, but a bond is simply the government saying the dollar is going to be worth this in 10 years and on my balance sheet. And if they keep borrowing, then bonds aren't worth anything when the dollar isn't worth anything.
Right.
So a bond is not as secure as real estate, in my opinion. Stocks as well. You don't know where a stock could go. You have an idea of a company business plan where it could go, but it's up and down. So is it a good hedge against inflation? Well, no, not really. Is Bitcoin a good hedge against inflation? It could be. Is gold a good hedge against inflation? It could be, to preserve wealth. But like Ashton said, if you're interested in growing the wealth at the same time, not only hedging against inflation, but growing that wealth, real estate is one of the best solutions for that. It's been proven by the wealthy generations for years. You can see the families, the wealthiest families always have real estate in a majority of their portfolio, and there's a reason behind it. So it's doing protection of the risk. We always look at the market, right? If you look at any recession, there are markets that suffer more than markets that suffer a lot, right? Yeah. So for example, if we're buying in the population growth, the rent growth, the high employment, a lot of employers in the area, those areas aren't going to have as much of a pullback. Why? Because there is so much need for affordable housing in those areas, simply because of the demand. If I have a lot of employers, if I have a lot of population moving in, if there's a lot of rental growth, it's showing there's a lot of demand for housing, and housing is in high shortage in those areas. Housing is in shortage across the United States, but in those markets, it's even more shortage because you have more people moving in. So if you buy in those markets, the risk of a recession crashing those apartments, that we do multifamily. So I'm not going to talk about single family, but the risk of it affecting multifamily is lessened to a degree. But it's something to be aware of. In a recession, there will be a pullback. I'll leave this last comment though. In the 80s, interest rates were at 18% and an all-time high. We're going to 6, 7, 8. Who cares? In all honesty, the interest rates are not going to stop people from buying for the next 3 years. I can almost guarantee you that. And most likely what's going to happen in this case is the Fed is just going to they're scare the market, and then they're going to print more capital. So I think we're 3-4 years away from even a pullback. And we could even never get there, but it's about the investor. It's about you, or you, the partner, you, the managing partner, determine what is your risk tolerance, create those, try to limit it as much as you can. And we do that by picking the right market most of the time.
Right. In short, what's you and your team's investment thesis? Buy and hold, flip in 5 to 7 years after forced depreciation? Any specific investment thesis that you guys have?
Yeah, we invest for cash flow because
Okay.
that's how we hedge against a downturn, right? If it cash flows from day one, our expenses are covered.
Right.
But we buy for cash flow by B and C class properties in emerging markets, in markets that are growing, like what Chris said. And we typically hold for about 5 years. Although I will say, with how much capital is moving around right now,
Yeah.
we've had almost 4 deals now. We're about to see if the fourth one's going to go.
Right.
Deals go full cycle in under 2 years. So, but that's not normal. Our
Correct.
business plan is typically around 5-year hold. Yes.
Wow. Okay. Okay. And how have you guys been executing the debt on these properties or assets?
Yeah, some are non-collateralized, or what you would say, like we've had a couple of properties under 1 million purchase price, and those are typically recourse loans, but preferably you want the non-recourse. So we try to go over the $1 million mark. But with partners, we're at the 120 unit size. We did a 384 unit deal, and those are all backed by Fannie Mae. Typically around that mark, it's like 75% loan, 70% loan. It's getting more around the 60 to 70% range now. But yeah, typically interest only, 1 to 2 years, and then locked in for the remainder of the term. But
Wow.
depending on the deal, we've been we're exiting three or so deals this year, and it's been 2.5 year holds. So the market's been really good for syndicator and investors investing in syndication groups. And all this to say, people really thought it was going to end in 2018. So you just don't have a crystal ball. Do your best
No,
with your
that's
own
right.
capital to preserve it. Yeah.
I asked because that's one of the hotter topics of bridge, mezzanine loan, which is interest only typically, and then versus Fannie Mae, Freddie Mac, fixed rate, 30 years, whatnot. So I wanted to ask, like, okay, within the 4 years that you guys have been investing, what's been working for you? Seems like bridge is too popular right now, but one of the higher risk for the investor is, okay, since it's interest only, sometimes it's variable, and if there's a downturn, then rates will go up, and now the actual sponsor group or syndication group will, how do you pick up from that? I guess you maybe might hold, but it's just a concern for the investor.
It's preferable, obviously, to go fixed rate debt. If you can go fixed rate debt from the start, that's great. We're at such peak prices now that most groups will do bridge debt for at least the first 1 to 2 years, and really it's because the income level, without the business plan being executed, without
Right.
the first 2 years, just don't satisfy a fixed rate, for that first 2 years. So for the first 2 years, they'll gap it and then do a fixed rate loan for the rest. And, I'd say there is a risk to bridge lending, right?
Right.
Things can happen, and usually you can cap that risk even as a syndication group, or you can buy an insurance, rate insurance. So if you limit at how high the variable rate can go up, that's an additional cost, has to be met. Deal still has to work like that. But yeah, if you buy cash flowing, at least you're limiting the risk. And then if you're, buying that insurance, and if you're limiting how many years you're in a bridge loan, that's always, another good.
That's right. That's right. Well, thank you very much, Ashton and Christopher, for being on the Startup Ariasha. If you guys have any final words, this is open for you guys now.
Yeah, I think you're talking a lot about risk. I love what Chris just said. You're looking back, 20 years, the 20, 30 years now, interest rates, what they were. And it always reminds me of that Chinese saying, and I say it all the time, the best time to plant a tree was 20 years ago. The second best time is now. So if you're on the hedge, like you trying to play the market, that's not the play that'll get you where you want to go.
Correct. Thank you for that. And what's the best way for people to reach out to you guys to learn more about what you guys do?
Yeah, you can visit our website, valkyregroup.com, VALKERE group.com. A lot of free content on there. We give a lot away, over 250 blog posts written. I mean, podcast, every podcast we've been on there is linked on there. So you can check us out, check out what we do, see if, you learn something.
Awesome.
Want to reach out.
Well, thank you very much, Ashton and Christopher. And I'll end this